Transform your business with Leon Hess billion-dollar strategies. So, ever wonder how some folks start with basically nothing and end up running massive businesses? Well, that's Leon Hess for you. He began with just one beat up truck during some of America's toughest times and built an oil empire that made him filthy rich. Well, guess what? The strategies that he used, you can use them too. Imagine taking Leon's playbook and applying it to your own business. While everyone else was freaking out during the Great Depression, Leon was making smart moves that would pay off for decades. What I love about his story is how practical it is. We're talking about real strategies that help with real problems. Strategies such as spotting opportunities that everyone else misses. He was really, really good at this. Getting control of the whole supply chain so he can keep more money in his pocket. Building a team that actually sticks around and gets stuff done. Dealing with annoying regulations in a way that actually helps his business. This isn't just some boring business theory. These are the exact moves that turned one truck into a massive company worth billions of dollars. They could work for your business too. And if you want to know how to apply the same thing to your empire, I'm going to be breaking down 10 strategies that Leon used. And I will also show you exactly how to use them in your business and your venture. So get ready to learn some of the game-changing business tricks from one of the masters of the universe. First, let's start with what Leon Hess was really good at. And the first strategy is identifying and capitalizing on undervalued opportunities. So in 1933, he had a fuel oil pivot. At the age of 19, Leon Hess recognized that the coal distribution business his family trade offered limited growth due to thin margins and market saturations. Instead, he pivoted to fuel oil, a byproduct of gasoline refining that competitors dismiss as a waste. Hess acquired a second truck to collect this residual oil, repurposing it as a cleaner, more efficient heating alternative for homes and businesses. By solving a disposal problem for refiners and meeting consumer demand, Hess established his first competitive edge. This early move laid the foundation for Hess Oil Corporation and exemplified his ability to identify value in overlooked markets. So, for your business, for your venture, look where there are undervalued opportunities. It could be undervalued companies, it could be undervalued assets, or how can you turn a waste into an asset? How can you turn something that people would consider useless into something that is useful? So, that is a strategy that Leon was great at. Throughout his career, he was able to see and recognize opportunities. And as a leader, CEO, executive, somebody that is in VC or hold operates a holdco, you need to be able to identify undervalued opportunities and capitalize on those opportunities. If you're an investor, it could be timing of the market. Hetty Green was really great at buying stocks when they were undervalued or when there was a decrease or the market wasn't at its peak. It was the time where it was the Great Depression. So there's always opportunities around. You just have to look for it. You just have to see it and find great. It could be undervalued companies, assets. It could be undervalued people. This is the first first strategy that Leon Hess is great at, and he executed really well. The second is vertical integration to control supply chains. So in 1957 to around 1960s, he had a refinery expansion and retail dominance. Hess transitioned from fuel distribution to refining in 1957 by opening his first refinery in New Jersey, followed by facilities in Texas and the U.S. Virgin Islands. The St. Croix refinery, completed in the 1960s, became the world's largest at the time, leveraging federal tax incentives and circumventing U.S. flag shipping requirements to reduce costs. By 1960, Hess launched a retail gasoline station chain, ensuring that direct control from crude refining to consumer sales. This vertical integration eliminated middlemen, stabilized margins, and allowed Hess to undercut competitors on price while maintaining profitability. So, figure out ways how you can dominate the market, whether it is a gasoline station chain, or in this case, it was a gasoline station chain, direct control from the crude refining to consumer sales, a vertical integration where has eliminated the middleman, stabilized margins. Find areas where you can control the vertical integration. You can buy business that are horizontal integration or vertical integration. The more you control the supply chain, the more it will help with the margins, and also it will help you to dominate the market. So use this strategy. Very, very helpful. A lot of business greats use vertical integration, horizontal integration. Andrew Carnegie also did the same thing. Next, strategic mergers and acquisition. All right. So in 1969, the Amerada Hess merger. In 1969, Hess merged his company with Amerada Petroleum, a major crude oil producer, to form Amerada Hess Corporation. This acquisition provided access to upstream assets, balancing Hess' downstream strength with Amerada's exploration expertise. The merger diversified revenue streams, mitigated supply chain risk, and positioned Hess as a fully integrated energy leader. Hess retained operational control, ensuring his cost-conscious philosophy permeated the new entity. Now, find, like what we were talking to before, you can buy companies that are horizontal. You can acquire them on the horizontal integration or the vertical integration, but find a strategic mergers and acquisition that's going to help you with your product, with your service, whatever it may be. It could be if it's a technology company, if it's a service company. Let's say you have an accounting business. How can you acquire maybe softwares, technology, or tools that will be able to enhance the operations? It could enhance the performance of the business, automation. There are things and tools and strategies and businesses that already exist that's going to complement and enhance your business, enhance the market share, enhance the productivity, enhance the talent capital, right? You can do an acqui-hire. So look for strategic mergers and acquisition into that can be applied to your product and service. The fourth strategy that we're going to cover is the world-class logistics and operational efficiency. So in 1940s, the Red Ball Express and the post-war expansion As the fuel officer of General Patton during World War II, Hess orchestrated the Red Ball Express, a 6,000 vehicle operation delivering fuel and supplies across Europe. This experience honed his logistical precision, which he applied post-war to expand Hess Oil's delivery network. By 1945, Hess operated 10 trucks strategically located to storage terminals, enabling rapid, reliable fuel deliveries that captured 80% of Northeast U.S. market. His terminals, built from repurposed oil tankers, reduced downtime and cost, exemplifying his mantra: speed and reliability beat size every time. So speed is very important. The speed of execution is very important. The being reliable is very, very important. Now, in this case, there was an opportunity for him, for Hess and his company to expand into different networks, different territories, and with strategically putting the terminals and deliveries in the right place, he was able to then expand his business. So the mantra, remember this all the time: speed, 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 and reliability beat size every time. Those are the words from Leon Hess. Speed and reliability beat size every time. With with Mark Leonard, he likes companies that are small because they're able to execute really fast. Speed of execution is really good, and more importantly, there's no bureaucracy, and they are able to pivot. So there's certain patterns with different business people, great business people that run great organizations, and you see a common pattern every time: speed and reliability beat size every time. Now, next, relentless cost control and financial prudence. So tax optimization and margin mastery. So Hess St. Croix Refinery exploited U.S. Virgin Islands tax benefits to slash operational costs by 30% by securing foreign refiner status. He avoided U.S. shipping regulations, further reducing expense. Hess personally tracked margins at every gas station, often reciting them from memory during meetings. That's how crazy he was. He was tracking the margins at every gas stations, often reciting them from memory during meetings, and he would even quiz his people about the margins, the operations, the numbers. This granular financial oversight allowed him to relocate savings to high return projects such as exploration in Libya during 1970s while maintaining debt discipline. So let's break this down into three parts. First, he set up a corporation business in U.S. Virgin Islands to cut 30% of the taxes. And I did a video on Ari Onassis. He did the same thing for his business. He set up a entity in a different country, in a country or in a jurisdiction where it's tax friendly, so that he doesn't have to pay a lot of taxes. He avoided shipping regulations, has also reduced his expense. So figure out ways where you can legally set up a corporation or reduce your taxes so that it will help your bottom line. Next thing, Hess tracked margins at every gas station, often reciting them from memory. So first, he is obsessed about his business. Sam Walton did this also. He was obsessed about his business, the numbers, the structure of Walmart. Bernard Arnault also did this. Bernard would go to every store or to the store that are very popular, and he would observe and he would see the layout, making sure that everything is working and making sure that the structure is correct. So people that do amazing in business are the ones that are obsessed, are the ones that are maniacal, are the ones that are paying attention to the details? Are you paying attention to the details in your business? The numbers. Do you know exactly the numbers? Do you know exactly the 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 operations, how it works, the structure, the organization, the people that are reporting to you? Do you understand the financial oversight? Do you understand how the operations work? Do you have a plan on how to deal with debt, the discipline, or how to handle cash flow, how to handle excess profits, dividends? Do you know all of those things? These are the things that make a great business person. So be great at understanding these things: tax optimization, margin mastery, understanding the business, understanding every number, and positioning your business so that you can dominate the market. 6, building strategic political and industry relationships. So in 1940, he had a David Willens alliance. So Hess marriage to Norma Willens, daughter of New Jersey attorney General David Willens, cemented a partnership critical to navigating regulatory hurdles. Willens provided legal counsel and political connections, helping Hess secure lucrative federal fuel contracts post-World War II. This relationship also facilitated approvals for storage terminals and refineries, illustrating Hess' belief that success often rests on a minute reading of the regulations. So relationships are very, very important. Relationships with the right people is very, very important. And he had the right type of relationship with somebody that was very, very powerful. Hess had a relationship with an attorney and also married the daughter of the attorney. And with that, he was able to get legal counsel and, more importantly, political connections. Now, in your business and in your industry, how are you building strategic relationships? Relationships that's going to create a win-win situation for both parties. A relationship that's going to enhance the business. Relationships that's going to attract talent. Relationships that's going to enhance customer experience, right? These are relationships rule the world. They are key. If you look at all the masters of the universe in all my previous videos, there are people had a strategic way to meet other powerful people, whether if it's parties, whether if it's hosting events, yacht parties, private jets. You have to have a way to connect with the right people and have a strategy to get those people in your life, and more importantly, have the right connections. You know, there's always saying it's not what you know, it's who you know. So don't forget this strategy is very, very, you have to be proactive at this. This is not something that you can lay back and people will just go to you. You have to seek the right people. You have to be intentional about meeting the right people. Next, regulatory navigations and exploitations. In 1960s, the Virgin Islands refinery, Hex St. Croix refinery, operated under a unique regulatory loophole. Classified as a foreign refinery for shipping purposes, but a domestic one for energy subsidies. This dual status allowed him to bypass U.S. shipping laws while receiving DOE grants, reducing crude transports costs for 40%. The refinery became his profit engine, generating $500 million annually by 1970s. Okay, so there's going to be regulatory loopholes, and it's for you and your team to find that out. Now, it's not illegal, but he did it in a way where it was positioning him as for a foreign refinery, which also allowed him to reduce crude transport and take advantage of the grants. So do the research, figure out, understand the regulatory navigation and exploitation for your business, for your industry, for your companies. There's always something out there, and especially now with the power of AI, the power of deep research, the power of teams, the power of technology, you can find all of those things faster. Apply this to your business. This is a very, very important one. He was able to reduce transport costs by 40%. And he was able to generate $500 million annually by 1970s. Imagine how much would that be worth in today's money. And that is the power of regulatory navigation and finding the loopholes. All right. Family-centric leadership and succession planning. So in 1970s to 1995, grooming John Hess. Hess involved his son John. Okay, Leon involved his son John in the company operations from a young age, appointing him to the board at 29 and a CEO by 1995. This decades-long grooming ensured continuity of vision. John later spearheaded Hess Corp's pivot to the upstream E&P, divesting downstream assets to focus on high-growth oil exploration, a strategy Leon endorsed before his 1999 death. He wanted his son to take over the company, and appointing him to the board at the age of 29. But before he became 29, there was training. He had operations training. He had training from proximity. And with that, getting all that exposure at a young age, John was able to become the CEO by 1995. Hetty Green also had this. If you want your legacy to continue, if you want your kids to take over the company, then get them started at a young age. Expose them to the business at a young age. Expose the kids. Have training such as understanding the markets, the business side, the financial side, the inspiring, the giving them the emotional, the EQ side, how to handle teams, understanding the vision of the company. Like these things it takes a while for somebody to learn them, and there's going to be a lot to learn. So start them at a young age. And this is what Leon did. He started his son at a young age. And there's other great business founders, leaders, executives, other masters of the universe who started their kids at a young age so that they can position the kids to take over the company once the founder retires. Next, number 9, brand building through unique marketing. So in 1964, the Hess toy truck introduced in the 1964 Hess toy truck became a holiday tradition, blending brand loyalty with nostalgia. Marketed as a gift for kids and collectors, it transformed Hess gas stations into seasonal destination, boosting December sales by 20% annually. The trucks, modeled after Hess real fleet, reinforced the company's identity as reliable and family-oriented. So first, let's dissect this. The first is having a marketing tool. What is the marketing tool for your business, for your service? In this case, it was a marketing tool that Leon used is a truck, and it was a gift for kids and a collectors. And Hess gas station, it it boosted the sales by them having this truck. Now, the second thing, okay, the second thing in this particular strategy is that he understood who he was going for. He understood the target market. And this one, it was the kids, because he wanted to reinforce the company's identity as reliable and family oriented. Now, when you're doing a marketing campaign, understanding your target avatar is one of the most crucial factors when laying out a marketing campaign. For your business, for your venture, what is your marketing campaign and who is it targeted to? Understand this. Apply this to your business. Understand that for Leon Hess, he knew who he was targeting. Let me use a McDonald's as an example. When they had Happy Meals, their target market for that campaign are the kids. And when the kids want to buy the Happy Meal, it brings in the whole family, making it a family-oriented experience. What is your marketing campaign, and what are you enforcing your company's identity with that campaign, with the company's brand with that campaign? Remember that. And the last one, last one. Adaptability and strategic reinvention. So this is now John Hess. Okay. The company divested downstream assets, refineries, retail stations to become pure play and E&P firm. This shift outlined Hess' 2014 strategy prioritized unconventional plays like the Bacon Shale or offshore Guyana. Leon's foundational focus on cost control enabled this transition, with divestments generating $12 billion to fund exploration while reducing debt by 45%. So the lesson is financial discipline here. If Leon wasn't focused on control and positioning, reducing debt, then they won't be able to divest all these great assets. And then the second thing is being adaptable to the situation. But this is being adaptable to the situation was under John Hess's leadership. Now, the company divested because they saw a shift in the market. And as business owners, as somebody if you run an organization, you need to be able to adapt to the market, adapt, shift, pivot, execute. Speed of execution is very important. So this is the last strategy, which is being able to be adaptable to any situation. Every master of the universe is adaptable. If you want to be a master of the universe, you need to be adaptable. All right. So Leon Hess strategies, from opportunistics pivots to vertical integration, demonstrate how operational discipline and strategic agility build enduring enterprises. Modern entrepreneurs, CEOs, if you're in private equity, if you're in VC, if you own a holdco, can emulate these methods that I just talked about. Exploit regulatory landscapes, control costs obsessively, nurture a relationship, be adaptable. And Leon Hess' legacy underscores the power of reinvention, proving that century-old companies can thrive by balancing tradition with innovation. So I hope you learned something here. You have to listen to this multiple times because these are timeless strategies. He was the last oil baron. He built an incredible business, very smart, took over the Jets, transformed the New York Jets into a great organization. Like whatever he touches turns into gold. Okay. And these are the strategies the strategies that his playbook, okay? His strategies, his playbook, his philosophy, his business philosophy, we just went over it. You have now the keys. The keys, I gave you the keys. I show you the door. Now you have to walk through it. It's up to you to apply these. Sit down. Lock yourself up in a room. Figure out how he used these strategies and how you can apply it to your business. The strategic acquisitions, the setting up different corporations where it's going to be tax friendly, being adaptable, understanding the marketing campaigns and your target market. These are very, very important strategies if you want to grow your empire. If you're listening to this, it means that you want to be one of the masters of the universe. And we are literally learning from the best. And if you want to continue to learn from the best, the masters of the universe, then I highly recommend that you subscribe, hit the bell button, make a comment, tell me what you like. Tell me what you like about the strategies, what you dislike. I'm open to feedback. If there's something that you want me to do, if there's something that you want me to talk more about, if you want me to talk about my experience, talk to me. I'm here to help you. I hope you found value in this content. But if you do me a favor and subscribe and share this video to somebody who might find this very, very useful. With that being said, enjoy and stay tuned for the next master of the universe.